Alright, what's up, boys and girls? It's your boy Paul Mac, and we are back with the Crypto Concierge. And today, we're going to talk about the most important skill set you can master if you want to be successful in investing in cryptocurrencies. Now, for some reason, it's one of the most overlooked in traditional markets. It's probably the most practiced, so I don't know if that speaks to cryptocurrencies or the demographic of the investors involved in cryptocurrencies, but it's a very overlooked skill set. Therefore, if you are serious about making money and investing in cryptocurrencies, tune in, because this one little skill set will give you a significant advantage over the majority. Now, I'm talking about risk mitigation, and yes, I know it's not sexy, but it is highly profitable, so tune in. Now, to make it easy, I'll break it down into 3 simple steps. And number 1 is biochemistry, like bio-motherfucking chemistry. Trust me, it sucks. For people in general, it is very hard to understand the value in risk management simply because we are fucked up. That's it. Our brains, our biochemistry, we are not built for investment markets. Our brains are terrible at quantifying prevention. It was Mike Tyson that says everyone has a plan until they get hit. And in crypto, well, we miss a pump, we lose our shit. But if we had decided not to invest in that asset and then it dumps, we just say, okay, cool, right? Without really acknowledging the loss we avoided. So it doesn't register in our long-term memory bank, which makes it hard for us to identify the next time it triggers. And I read a bit of psychology. B.F. Skinner, he writes about, he's a behavioral psychologist, writes about schedules of reinforcement, operant conditioning, and variable response. Basically how humans are conditioned to behave. And he leads along the pathways of understanding or comprehending sort of the causes of the actions and the consequences in advance, right? Which is very applicable to cryptocurrencies. And don't get it twisted, this is important. Our brains are highly complex and very subject to those sometimes you win, sometimes you lose type of games that just light up the brain's pleasure centers. And this is at the root of our addictive behavior, which is why it's important. It's basically the essence of gambling. And in crypto, when we see a few green dildos, our brain just starts mixing up batches of fucking dopamine. It drives us crazy. We become irrational. We make bad decisions. We lose money. It's that simple. And again, to reinforce this, anyone who's been in an asset that is just going to hell, it is a genuine biological and neurological event. It sucks. Our brains, our biochemistry goes crazy. Now, let me pose a question. What happens when you mix your brain's fight or flight mechanism with a gambler's high? That is a shitty cocktail. Well, basically, judgment becomes compromised. You start becoming very irrational. You make very bad decisions. Adios money. So we don't want that. So, understanding, accepting, acknowledging, and identifying that our brain's own biochemistry can and will probably work against you is the first line of defense. That is number 1. Those that don't understand this, don't acknowledge this, will get wrecked over and over again. Number 1, our brain's own biochemistry can and will work against us. So once we accept that, we can go on to number 2. And number 2 is complete data sets. Expand your data sets. Now, I am very guilty of this, confirmation bias. I am bullish by nature. I have been caught over and over on this. We are all subject to confirmation bias. You know, we build a bullish narrative and we just run off sourcing as much information as we can that reinforces that singular theory without looking at the other side. Recipe for disaster, right? So we need to be able to learn to be able to impartially, and I have to emphasize impartially, calculate determinative risk versus reward versus hopium, speculation, gambling, all the rest. And the best way to do that is to see both sides of the trade. Now, simple. For every trade we do, we should be able to build a strong case for why the asset will go up as well as why it will go down. And the best way to mitigate risk is to expand this particular data set, right? Because in crypto, incomplete data sets is what gets you killed. And like you hear it all the time, you know, crypto investors are like, oh, I didn't think that was going to happen. But really, all they've admitted to is having incomplete data sets. And man, when your money's on the line, it's one thing to be wrong, but it's just straight up lazy to be uninformed. So, number 2 is expand your data set, see both sides of the trade. Now, once we have accepted that our own biochemistry can work against us and that we have collected enough intelligence on both sides of the trade to be able to reasonably forecast the trajectory of an asset, we can go to number 3, which is the simplest part. Number 3 is to plan the trade and trade the plan. Now, this part is beautiful because here we get to remove all human error. How do we do this? The exchanges, fortunately enough, provide us all the tools we need to be able to execute this and autonomize this part of our strategy. So I'm talking about set your sells, set your stop losses, set your buys according to your plan that you've made in advance. If you master this one single discipline, even without the other 2, every single trade you do will either be a small loss because your stop loss protected you, a break even, or profits. Simple, right? So simple. Every single trade. Imagine if every single trade you ever did was either a 5% loss and you're out, or was just profits. Simple. And once you're in profits, move your stop loss up into profits. Simple. So to recap, risk mitigation. Number 1, accept that your biochemistry can and probably will work against you. Number 2, expand your data sets by seeing both sides of the trade. Number 3 is plan the trade, trade the plan, remove human error, let the exchanges do the work for you. That's all I've got for risk mitigation today. I'm actually in Singapore for the week. Consensus was I'm doing some work for BlockBuy team. I'll get into them a lot later. I don't want to really shill a project I'm involved in. A lot of chitter chatter in the market, especially in the CBD, just buzzing about blockchain. Met up some really exciting projects. China VCs are seeding a lot of Singapore projects. Everyone thinks China's out of the game. They're not. They're moving their chess pieces in, ready to checkmate. All right. You think ICOs are over? They're not. You think projects aren't getting money? They are. Trust me, blockchain is buzzing. That's all. We got heaps more content coming. Make sure you tune in if you like. Hit subscribe. If you don't, all good. Hit us with comments about things you want to hear. We got lots more people coming. We're gonna go into everything. Risk mitigation, psychology, trading, investing, cryptocurrencies. Which ones are good, bad, Bitcoin, decentralization, blockchain, all things blockchain, and how this is all gonna take over the world. Hit subscribe. Thanks for watching as always.